Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. As I've told clients in our weekly client webinar, I will be back on BNN on Thursday, June the 8th. If you are not a client, that's okay. You are hearing about it now and can put it in your calendar. If you have any non-FANG questions that you would like me to answer, then make a note to email them to BNN 2 or 3 weeks before I am due to be on to make sure that you get your questions asked and answered when I'm on. By the way, make sure to indicate that these questions are for me, Ross Healy. Of immediate interest right now is that all 3 of the North American stock indices are snuggling right up to their key breakpoints, preparatory to either an important market high or a possible breakout. Well, the breakout is not and would not be supported by the current fundamentals and would take, for instance, the S&P 500 into extremely rarefied valuation territory. Lately, that does not seem to make much difference. For one, our favorite Ponzi scheme, the cryptos, as represented by Bitcoin, have nearly doubled from their extreme recent lows, and investors seem more ready to look for opportunities to get invested than they are to run for the hills. However, there is still a lot of caution and concern, as we will see in a moment when we look at the FANGs this week. Now, before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, let's start off with Meta, and wow, what a week Meta's had. Okay, the first thing that, of course, we notice when we look at Meta is that the chart had been rising pretty steadily, but then kind of pulled back a little bit here. Like, how good are those numbers going to be? Is Zuckerberg going to deliver on his promise? Well, he did. And what happened, of course? We got a nice gap in the stock, back up to and over its low super growth price, which is 4.5 times book value. Now, where might the stock go from here is an interesting question. Okay, what Zuckerberg here is trying to do is to restore that trend, that earnings and fair market value trend. And if he does, then with the breakout of the LSG price there, we can maybe move up at least a break point to its mid-super growth price. That's 5.5 times book. But maybe he can go all the way back to that triple top, its bubble price at 7.4 times book. No promises, but it's looking interesting, particularly with that nice pickup now in the fair market value that seems very much supported by what Zuckerberg is doing. NVIDIA is, I wouldn't say it's a conundrum, but it's been sitting right there on its HB5 price, which is 26 times book value, and without actually any real movement. And particularly, I notice this week, very, very little action has taken place, despite the fact that some of the FANGs have done fairly well. I'm still possibly looking for a peak at its HB6, which is be 33 times book value, which is its very, very long-term valuation high, last seen way back in 2000. Apple, well, we've got to, you know what I have to say about Apple. We've got to wait for our new balance sheet to come in. You know, what I'm showing here is the 5-year look at Apple, and you see that these lines have been heading down. That means that the book value has been steadily falling as the company has bought back stock. And why is this important? Well, let's go and click on this price to book tab right here, and what do we see? Well, we see that buying back stock has meant that the return on equity, the ROE, has steadily increased. And when that happens with stocks, it tends to move their price to book, their valuation ratios up with it. Now, very recently, in the last quarter, the company didn't do very much, and it sort of rolled over a little bit, and the stock hasn't done very much. Now, in this last quarter, of course, the ROE has apparently really fallen, but of course we don't know that that's happened because we don't know what the share buybacks have been. But I understand they've been large and strong. So we want to see whether that trend continues, therefore potentially pushing the valuation of Apple even higher. Alphabet, reported some decent numbers. That's about all you can really say. And they have promised that they're going to buy back about $70 billion worth of stock. Well, that has not done very much for the stock, has it? And part of the reason is that the impact of that $70 billion of share purchases is not going to make a good deal of difference to the book value of this company. Alphabet has a very strong balance sheet, so they have got lots and lots and lots of dry powder, as it were, to do something. Well, they're not going to do anything with it. They're just going to buy back stock. And as I say, the market is not reacting terribly well to it. It continues to dither on either side of its low super growth price, which is 4.5 times book value. And as I said, that kind of action often leads to lower prices. So we are cautious and watching for support at about $100, the low super growth price. Microsoft, on the other hand, actually reported some very nice numbers, and it I think is increasingly clear that Microsoft is winning the cloud computing war, if such a thing can be said to exist, particularly as regards to Alphabet and Amazon. So we had a nice jump here. Maybe we're going to head to its HB2, but again, I'm watching here that long-term indecisive trading around its HB1. But for now, all we can do is really hold the stock in hopes that it's heading higher. Amazon has had a very interesting week and a half. Okay, as you can see here, the stock, in anticipation of a great earnings results, has been moving steadily up to its bubble price at 7.4 times book value. And I'm sure that if the company had reported blockbuster earnings, we'd have probably seen a breakout here. But we didn't get that. So the stock has moved up to its bubble price and is backing off. The last signal, SVA signal I got on Amazon was a sell at its bubble price a little while ago. It never got down to its mid-super growth price, to technical support, so I was never able to reverse the sell signal. But you'll notice when we look back over the history, at least the recent history of the company, you'll notice the significant precision that the stock has had, with one minor exception when it broke out. But outside of that, the stock has been very, very precise, and it was very precise again at its bubble price. I still have to say I'm expecting lower prices. Now, one last thing to look at is the trend of the fair market value. And let's sort of take a look at that because it's kind of interesting. Okay, it falls away and then it rallies a bit, falls away and rallies a bit, falls away and rallies a bit in hopes that something good is going to happen. Well, I'll be very curious to see what happens in the next quarter, because if that trend continues and we get another falling away, the stock is going to be heading lower. And my immediate target would be back to its mid-super growth price, 5.5 times book. Netflix had a perfect hit on its mid-super growth price, 5.5 times book, when it reported its numbers. And the numbers were, as the company had promised, they were poor. Well, the stock actually closed up, but since that time, it's just been healing over. And I expect a retracement to its MSG price, and perhaps lower, but we'll have to see. I don't know whether that uptick in its fair market value is more hope and dreams than it is reality. We'll have to see when the stock pulls back. Finally, Tesla, after again dithering about uncertain, indecisive trading around its HB2, finally said, okay, enough is enough, and down it has gone to its HB1 price. And the question is now what? I am not encouraged by this action here, and quite frankly, I expect a further pullback to its bubble price. Now, to sum things up, I asked last week whether the FANGs have given us much of a clue as to what to expect going forward from here. And the answer was no. As a group, I called the trading in the FANGs indecisive. 3 of them, Meta, NVIDIA, and Apple, were in the buy-hold camp. 3 were irresolute. That's Alphabet, Microsoft, and Amazon. And 2 were sells, Netflix and Tesla. Has anything changed this week with the sprightly gains in the FANGs at the end of the week? Well, let's sum it up. First is the buy-hold camp. First and foremost is Meta, which has jumped right up to and a little bit beyond its LSG price, 4.5 times adjusted book, on knock them out of the park numbers, as Zuckerberg had promised. When we look at the chart itself, you could see a little stutter very recently as investors thought that maybe they were being a little too hopeful, but not so much of as a setback that one needed to be concerned about it. Well, our enthusiasm for the stock remains very much in force. If the stock can hold here as I expect, this would be a confirmed breakout, and we would definitely be heading higher. Stand your ground. Second, NVIDIA continues to sit right on its HB5 price. That's 26 times book, where it's been holding nicely and could be heading to its HB6 or 33 times book, its 23-year high. But remember last week that I had an important observation to make, and that is, whenever in the past I have seen a stock hold tightly and with precision, without any false move lower, even momentarily, that often means that any penetration of the breakpoint tends to lead to a genuine breakdown. Well, we actually got a momentary break this past week, but nothing worse to report so far. I must tell you, however, that in this circumstance, I treat that tiniest break with some respect, and so should you. Now, since then, it's been a case of nothing to see here, folks. Keep moving along, please. Keep moving along. But was that all that there was to see? The action yesterday and today was very uninspiring against a background of considerable excitement for the FANGs. As for Apple, as usual, I really need to see their new balance sheet. I know that the company has been quite active in buying back stock this past quarter. Perhaps that guesstimated HB6 price, that's 33 times book value, will prove to be support, but there's no rush to make any hard decisions right now. So I will continue to put it down as a hold and wait and see. There are three uncertain stocks. Amazon had rallied right to its bubble price, that's 7.4 times book, and then disappointed investors as the company reported slowing revenue growth for its Amazon Web Services division. Even with a modest revenue beat, Amazon remains mired in single-digit sales growth and is coming off its weakest year for expansion in its quarter century as a public company. The stock must break out here and now, and I will only believe that it can happen when it actually does. Alphabet had modest numbers as they reported first quarter revenue of $69.8 billion, but only up 3% year over year. Its cloud business did report a profit for the first time since its launch, taking in $191 billion. They're promising to buy back up to $70 billion of stock, but that's only about 3% of their total equity. So the impact will not be as profound as, say, those buybacks do for Apple. And the stock so far has not greeted the announcement with any eclat, I have to observe. Microsoft beat its sales and earnings expectations, reported earnings per share of $2.45, beat expectations of $2.23. The cloud business that delivered over $28 billion in quarterly revenue, up 22%. It certainly looks very much as if its AI applications are industry leading, and Microsoft Cloud powerhouse is in motion, swamping the efforts of both Alphabet and Amazon. Finally, I have two sells on my FANG list. Netflix shares plummeted right down to their MSG price in after-hours trading, then rallied and closed a snake higher, but then continued to ooze lower, back towards its MSG price. Management had been negative as far as its first quarter was concerned, and is trying to put a better spin on the outlook, although it's apparent that the market is not entirely buying their story. I have to maintain my sell rating on the stock, and we will see what happens when the shares test their mid-super growth price low, which I fully expect. Looking at Tesla, after some weeks of dithering around their HB2 price, that's 12 times book, the shares let go and had a direct hit on their HB1 price, following what was essentially very poor news. Drastically dropping prices to try to maintain market penetration weakens their profit margins, but may do very little for market share or future sales. Looking at Tesla dispassionately as a pure auto play, the shares would have to fall a very long way before it would be comparable to other auto manufacturers around the world. You should keep in mind that saying about pioneers, they often wind up with arrows in their back. Yes, Tesla has brought down its average price to below the global average, but their car quality is only so-so. They have a very poor dealership network, and they are in what is increasingly looking like a very crowded marketplace. You can only float along on your electric vehicle founding reputation for so long, and then you have to deliver, Right now, you are paying a lot for a wing and a prayer. I'll finish off by reminding you that unless or until the S&P is actually able to break out over its super growth price, 3.5 times book, which is very near at hand, I would treat any exposure to the NASDAQ stocks with considerable caution, and keep in mind that the NASDAQ 100 must confirm any breakout by the Standard & Poor's. Before I close, I'd like to say that if you want to learn more about how we go about conducting our analysis and our proprietary set of valuation tools, go to www.strategicanalysis.ca/pricing. There, you can take advantage of our limited time trial offer to try out our services for 3 months. We'd love to have you join our community. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.